the BDTV Economy and Market Show, where we give you a comprehensive breakdown of happenings going on in the economy and as well as the market, the equities market, the bond market, whatever market it may be. We're starting off with some business news headlines making the rounds. First of all, the CBN has ordered banks to submit their capital plans as pandemic-era loan waivers have expired. The Central Bank of Nigeria has ordered commercial banks to submit capital restoration plans by the end of this week as part of sweeping reforms aimed at strengthening the sector's resilience. In a circular that was published on Monday, July 7th, the Apex Bank directed lenders to outline how they intend to address capital shortfalls, including details on restructured loans, provisioning level, and capital adequacy ratios. This directive follows the expiration of the pandemic-era regulatory waivers on June 30, which had previously allowed banks to exceed single obligor limits and under-provision for risky loans. This move is part of CBN's broader push to stabilize Nigeria's banking sector amid economic headwinds such as double-digit inflation, sluggish growth, and repeated currency devaluation. Last month, the CBN barred banks under forbearance from paying dividends, awarding bonuses on making foreign investments. It also raised the minimum capital requirement for banks nearly tenfold in Q1 2024 in a bid to bolster financial system stability. Then we move on to Cuda Bank, that has seen transactions in the first quarter of 2025 exceed 14.3 trillion naira. Cuda processed over 14.3 trillion naira across 300 million transactions for Q1 2025, with retail banking accounting for 8.5 trillion and business users around 5.8 trillion. The bank also issued about 17 billion in overdraft and paid 130 million in interest to some of its users. The CEO, Babs Ogundeyi, highlighted plans for international expansion, with Kuda's app already supporting pounds and euros and dollar integration coming soon. The bank is also planning to leverage artificial intelligence, including a chatbot designed to improve customer service and reduce support load. The company says it's applying machine learning insights to re-emerging digital banking. The bank is set to deepen its footprint in digital banking with new business banking solutions and AI-powered services. At a recent media briefing in Lagos, Nosa Oyegun, the VP of Product Innovation and Strategy, announced the company's plans to serve real businesses such as supermarkets and restaurants beyond the traditional POS agency model. Then we move on to the CBN, that is introducing rules to make banks manage loans better. The Central Bank of Nigeria has issued new guidelines to ensure capital consistency and transparency in how commercial banks report credit information. The directive, that was dated June 13, 2025, follows an on-site examination that revealed discrepancy in banks' credit printouts compared to customer files and prior audits. Under the new rules, each loan must retain the same contract number throughout its lifespan. If a contract number disappears from a credit report without evidence of full repayment, it will be classified as a lost or written off facility. The original loan date must remain unchanged even if restructured or enhanced, and documented proof of any restructuring must be provided. The CBN also limited the use of yearly and bullet repayment structures to 10% of a bank's loan books. Bullet repayments are now restricted to asset-linked or cash-back loans. The measure aims to strengthen credit risk management and promote greater accountability across the banking sector. Then we see in Dangote Refinery, the refineries are in a full transition to Nigerian crude by the year end 2025. Dangote Industries has noted that a 650,000 barrel per day refinery will rely entirely on Nigerian crude by the end of 2025. This is marking a major shift in the nation's energy sector. Speaking to Bloomberg, Deva Kumar Edwin, the Vice President of Oil and Gas at Dangote, confirmed that local producers now supply about half of the refinery's crude and are expected to meet full demand by year end. The refinery, located in Lekki Free Trade Zone, began operations earlier this year and has already positioned Nigeria as a net exporter of refined products for the first time in decades. Initially dependent on imported crude due to local supply gaps, Dangote's pivot aligns with its long-standing goals to reprocess domestic oil and reduce foreign exchange losses. Analysts are saying that this move could stabilize Nigeria's upstream sector, encourage investment, and serve as a key test of ongoing oil sector reform. The refinery is expected to meet local fuel demand and supply excess to West Africa. Then in the US, Donald Trump has reaffirmed the August 1 deadline for trade deals. The President of the United States of America set August 1, 2025 as the tariff deadline, declaring that no extensions will be granted. It was in a Tuesday social media post on Truth Social, that's his own personalized platform. The statement comes amid ongoing uncertainty over the timeline and scope of the administration's global tariff policy. He said, "There has been no change to this date and there will be no change. All money will be due and payable starting August 1st. The announcement follows months of shifting deadlines and mixed signals from the administration. Just a day earlier, Trump called the deadline firm but not 100% firm, suggesting some room for negotiation. On Monday, the White House began sending tariff letters to 14 countries stating that the tariff rate may be adjusted upward or downward based on bilateral relations. Trump warned that retaliatory tariffs could trigger higher penalties from the US. The upcoming deadline marks the end of a 90-day pause on previously announced reciprocal tariffs. After the break, we'll come back for market rundown where we'll give you a breakdown of what's going on in the equity space. Let's go to the equities market. On Tuesday, July the 8th, the NGX All-Share Index closed at 121,653 points, a new all-time high, up 358.60 points or 0.30%, extending its positive run and pushing year-to-date gains to 18.2%. Market capitalization also climbed, ending the session at 76.758 trillion naira. In dollar terms, this is about, we've seen the NGX now cross the $50 billion market cap mark after falling below $40 billion in early 2023. In late 2023, I beg your pardon. Total volume traded stood at over 1 billion shares with a value of around 19.48 billion in traded value. Top gainers, we saw a lot of 10% rally from Champion Breweries, NGX Group, Omatech, and C&I Listing. We saw Champion Breweries still on its rally, on its run. After yesterday's market, Champion Breweries has now recorded over 300% gain this year. New share price 14 naira 96 kobo. NGX Group 56 naira 10 kobo. Omatech 1 naira 10 kobo. Then C&I Listing 6 naira 60 kobo. Then we also saw Nimet Pharmaceuticals. Nimet Pharmaceuticals up 9.95% to close at a share price of 9 naira 50 kobo. And on the losing side, on the flip side, we see Deep Capital shared 10%. eTransact, it was followed by eTransact that shared over 9%, shared 9.55% to hit a share price of 9 naira. NNFM, after weeks of rallying, shared 9.17% to now fall below the 100 naira share price, 98 naira 10 kobo. Suno Assurances shared 6.22% to close at a share price of 4 naira 22 kobo. The VFD Group down 6.16% to reach a share price of 13 naira 70 kobo. And in terms of our most actively traded stock, we see Access Holding leading the volume and values chart. Leading the volumes chart, however, not the values chart. We saw GTCO lead the values chart. Access Holding, in terms of trading volume, 124.25 million shares, over 2.7 billion worth of that share was traded yesterday. Japal Gold, 123 million shares, over 340.9 million naira worth of that share was traded yesterday. However, in other shares, we see Mutual Benefits Assurance, 55.558 million, just around 77 million naira. Universal Insurance, 54 million, around 38 million naira. Then ICO Insurance, 40.437 million, just around 70.8 million naira. In terms of value, we saw GTCO also lead the markets to around 3.5 billion worth of shares traded yesterday. On the global market side, on the global indexes, we see the US Dow Jones slipped by 0.31% to 44,267 points. S&P index down close, slightly flat 0.02% to close at 6,229 points. Then we see Nasdaq Composite, despite the downward trend of Tesla, we see Nasdaq Composite up just almost 10 basis points. That's around 9 basis points, 20,431 points. This is as a lot. There's been a mixed session following the recent trade news that was announced by the US president. And in Asia, we see the Asian market closed higher. Nikkei 225 rose 0.26%. The Kospi gained 1.09%, and the Hang Seng Index also gained 1.09%. In Europe, indices were in the green. The FTSE closed 0.54%. The CAC 40, which is the Paris Stock Exchange, 0.56%. And the DAX edged up by 0.55%. On the currency side, the Naira traded at 1,534 Naira to the dollar, while we saw the Euro trading at 1,796 Naira to the dollar, and the Pound, 2,083 Naira to the Pound. This is on the currency side. Not much has been happening on the currency side over the last 1 month, considering that we are in the corridors of stability. We've seen the Naira fluctuate between 1,530 to 1,540 Naira to the dollar. After the break, we are shifting our attention to GTCO's listing on the London Stock Exchange. By this time, which is about 11:23 a.m., we're expecting that GTCO has started trading with the ticker GTHC on the London Stock Exchange. After the break, we'll return with a conversation on that subject. Last week, the finance space was kind of abuzz with news of our first banking entity that would list on the London Stock Exchange. So in the NGX, the Nigerian Exchange, we have quite a number of dual listings. We have Seplat Energy, we have Oando, Seplat Energy, we have Etel Africa. Those two are dual listed on the NGX and the London Stock Exchange, and on the Johannesburg Stock Exchange, we have New Gold ETF, and we also have Oando PLC. Just basically around 4 listings. However, none of this is a bank. None of this is a financial institution. GTCO listed its Global Depositary Receipts since 2007 on the LSE. This has been there. Zenith Bank also has its GDR listed on the LSE. That was many years ago, more than 10 years ago now. All of this we are now seeing for the first time in Nigerian bank will be listing on the LSE, and this is starting with GTCO that did that through a capital raise effort that will see the bank raise around $105 million. The bank is issuing 2.29 billion shares at about a reference price of 17 Naira per share. That was about $0.046 per share to some select institutional investors that it had pitched those shares to. Today, as part of the timeline, July 9 a.m., the bank announced that they were going to start trading on the London Stock Exchange. And to give us further insight on this subject, I have Ngozi Odum, who is a research associate at Cardinal Stone Security. Hi, good morning, Ngozi.
Good morning.
Yes, it's very nice to have you here. First of all, my question is, what's your take on this news, the fact that we have a Nigerian bank listing on the London Stock Exchange?
Okay, so I think it's wonderful news. It's quite a laudable achievement. It's the first for the West African entity, and is also the first for a Nigerian bank to be listed. And we know that, like you rightly mentioned, some other banks have GDRs, but this is a direct listing on the London Stock Exchange. So this is a laudable achievement. It shows what can be accomplished when institutions are focused and also they deliver value for shareholders.
Okay, one question I have to ask is, what does this move send? What kind of message does this move send about international confidence in Nigerian banks?
So I would say that it sends a positive signal. If you look at what has played out for the course of the year, and even what has been mentioned from global institutions, you see that the narrative for the Nigerian space is shifting, and also the foreign portfolio investors are becoming more comfortable with investing in Nigeria. Now, for Nigerian institutions, you see that if you look at them, on a trading basis vis-a-vis other African pairs. You see that they trade at a discount. But you now see the likes of GTCO, which is coming to list directly on the London Stock Exchange. It shows you that the investors' interests are really strong, and they also recognize that this institution has some values for them.
Okay, you mentioned something, just a quick deviation. You mentioned something around Nigerian banks trading vis-a-vis at discount with respect to their African partners, basically, or some of their international partners in emerging markets. Why do you think this is so, or why has this been so?
Okay, so I think it is a discount to the region that they play in. So most of these institutions are Nigerian led and Nigerian owned. So if you look at their origin story, they started in Nigeria, and for the likes of UBA, the likes of Access, and some others, they've actually extended their reach into other African institutions. But the core of their operations and where their headquarters is still located in Nigeria. So there's a discount given the macroeconomic situation of Nigeria that is applied to these institutions. So more and more, you begin to see a lot of focus being placed on diversification, both regionally and operationally, to provide a hedge on their operations and to place less emphasis on the Nigerian factor on their business.
That's almost leading to one question I have, but this question now GT has done it. Do you think that their peers will do the same? Which other peers do you think can take the same move? Which other banks in Nigeria do you think can take the same step?
Okay, so like you rightly mentioned, the likes of Zenith, which also has a global depository receipt. We also have the like of UBA and the like of Access. So these three institutions might also want to veer the route of GTCO. But I think what's the most important thing is owning their space and then assessing the market to judge on the readiness of investors, because it's one thing to want to list and it's another thing to have the interest so that you don't have an undersubscribed issue. So I think with what GTCO has shown, the likes of these other pairs that also have some exposure within the LSE might also like to ascertain or go through this route and also gain some exposure in the direct listing.
Okay. What barriers do you think that trying to list on, what barriers do you think they may meet in trying to list on the LSE? So, for example, one of the things that people have mentioned is the fact that when CBN came up with their circular some weeks ago, GT was basically exempt from the forbearance exposures and all of that. We see Zenith Bank with like some very high level of forbearance exposure, almost about $1.6 billion of forbearance exposures. Don't you think that these are significant barriers that may now exist for some of these banks that you mentioned, Zenith, Access, and UBA?
So I won't necessarily refer to them as barriers. I think when you're trying to take the next step, like GTCO has done, and for such a listing exchange like the London Stock Exchange, that is one of the most prestigious listing exchanges globally, you have to look at your businesses and you have to look at your operations, and you also have to consider it from the perspective of the investor. What would your investor like to see? I think the steps that GTCO undertook last year in terms of his balance sheet cleanup were well timed. Given that he had this intention, I'm sure it was well planned. This would not have been an abrupt decision. So I think it was well timed and they took the steps necessary to clean up their books. Also, with the CBN directive, I think this is actually a beneficial situation for other banks, because if you look at it, this is just pushing them in the right direction. So like you mentioned, for investors or barriers like you mentioned that might hinder them or hinder the reception, if they undergo this cleanup, this might make it more receptive for investors to consider, the direct listing participation.
So one now, increased oversight from UK regulators. Now GT is moving away from, okay, we are just regulated by the CBN and we are just regulated by the NGX, we are just regulated by SEC. Now they are moving into a system where they are now going to be part of their regulators will include Financial Control Authority of the UK. How do you think this will help their corporate governance?
I think it will strengthen their corporate governance and is also a positive. Like I said, it's a step in the right direction. So as an institution, the idea is that you're always growing, right? You're always growing and you're always taking steps to, better position the institution for growth and for global expansion, right? So this will not be their first step or their step entrance into the global markets. Like I mentioned that they had Global Depositary Receipts. So that kind of gave them an insight on the regulatory requirements on what will be required for them. But I think now with the direct listing, obviously is more stringent. So it will just improve their existing corporate governance. And that is what we require from the institution. We expect them to improve as time goes on.
And for the entire Nigerian banking sector, do you think it's going to have like some form of boomerang effect on the entire banking space?
Yes, I do think that it will have a pass through to other banks. I think when you want to compare yourself or position yourself, you begin to look at what your competitors are doing and to carve a name for yourself and to define your position or brand yourself. You also have to look at what are the international standards, what are the benchmark, and not just for GTCO, for other institutions, this has been, something that we've heard over and over again that management is thinking of. For the likes of access and all those things, they are also trying to set themselves up where they begin to follow with the international benchmark and similarly to other banks. So I think this is a step in the right direction, and this will also strengthen what they have going on currently.
Okay, thank you so much. Now we're moving to the part where I want to talk about for the entire recapitalization arrangement. We're in a situation right now, some of our banks have hit it. So if GT successfully raised the $105 million, they will hit it. Access has hit it, Zenith has hit it, EcoBank has hit it, I think Stanbic has hit it. We now have, I think we just have some few banks left to hit it. For the banks that are left to hit it, especially the lower banks, tier 2, tier 3 banks, do you think that this move is now suggesting that dual listing may be an alternative, or they would rather just continue in their M&A strategies that some of them have already keyed into? Because we are hearing there's some M&A that will be happening between Unity and Providus, and I don't know of others, but is dual listing now a viable alternative for the recapitalization move that CBN has been touting?
So I think it depends on strategic intent. I think for recapitalization purposes, because of the timeline, which is supposed to end in March 2026, that's quite close. I don't think that they will be pursuing dual listing because of the process involved and also the time frame. Will they be able to meet that? I don't think they will. And I think that will push them to consider the mergers and acquisition route. But beyond recapitalization, I think both both avenues offer different advantages. For the mergers and acquisition, it helps you to build skill within your operations, within the regions that you are focused on. And then with the dual listing, it helps you gain international exposure and international presence and widens your shareholder structure so that you're not domiciled in just one region. So I think it depends on the strategic intent, but beyond the recapitalization process, I think these are avenues that over time, I think other institutions will consider.
Okay, thank you so much. Then one question is about GT. This listing now will ensure that will involve the fact that they have to start reporting in USD. Do you think it's going to shield them from naira depreciation, or how do you think it's going to play out? Now they'll probably have to start releasing their financials in the USD level. How is it going to play out?
Okay, so we have just like we have other dual listed companies for the like of Seplat and Etel. So you have your Naira financials and you have your dollar financials. What that matters is what was the exchange rate that was like on the period, on the time of the reporting period, what exchange rate was used to translate those Naira figures to dollars. It really doesn't have any impact. It is the financial status of the bank. So it is the same either ways. It really just depends on the exchange rate at the time of reporting. So either ways, it's still the financial performance of the company. So I think you should have no business.
Okay, Thank you so much for answering us and giving a lot of insight on this subject. We have Ngozi Odum, a research associate at Cardinal Stone Securities. Thank you so much for being on the show.
Thank you.
Thank you. For our listening viewers, we want to just talk about something relating to GTCO's listing. As of 11 p.m., GTCO is seeing some bit of action on the NGX. We are looking at it right now. It's just trading up almost the 686 Naira share mark. Last week we asked the question, will GTCO hit the 100 Naira share mark before Stanbic IBTC? We'll never know. However, but that's where we round it up today on Economy and Market. That's where we call it a day for this show this morning. Have a lovely morning. See you again on Friday.